Hello everybody, this is the monthly trend scan of the futures market for the month of March. So it's always a bit different when we look at these higher time frames, quarterly and monthly chart. So let's have a look at the US equities. So the US equities, I mean, we had these on a monthly chart. Well, we see it as well on the quarterly. We had these very important consolidation patterns. That was the Corona pandemic spike low, and this was the start basically of the Ukraine war in February that caused this consolidation, and there was a rebreak, right? So whenever we have a pattern where we know what the target is, and basically this is the momentum move of that target, and then we can project it out. So we are getting close to the target, right? It's slightly higher. So the question is whether this is going higher to the target or whether it falls short of the target and we see a pullback, right? Pullback can have many forms. It can be a consolidation sideways, as we've seen here both, or it can be a deep pullback down, a vertical pullback. So we could see here that the bull for the time being is over, and we get a pullback back to the 21, however that looks like. So this is potential. There's potential here for that. Now let's have a look at the metals. So gold. Well, gold has this series. I mean, this is a huge momentum move here, right? That started in 2001. That's a huge momentum move. Then we had a very big multi-year pattern, and we had another pattern following that. So this is a pattern within a pattern, and that means that there's double pressure. So twice of those two patterns, the energy is in here, and it now gets released, basically producing a momentum move of a similar sort. Now this is only gone halfway, so there's more room to go, which doesn't mean that this is not making a pullback, right, to the 21. But the gold bull is not over yet. And well, let's have a look at this pattern. Well, this is we see it better here. There was a cluster of patterns too, right? So for this one, this was a momentum move, and we have overachieved that, right? So it looks like this move, right, is coming to an end, and we're seeing a pullback. A minimum pullback would be 2,500, so which would be a pullback to the 8. So as well here for both US equities and gold, we could see after this big move up, stop run move, we could see now a period of a couple of months, even couple of quarters of a pullback. Well, that allows for trading this short, right? Snap back to moving averages. That's what we call it. That's what we call it. It can be traded short in lower time frames. Now let's have a look at copper, the HG contract. That still looks like it can have a long way to go. This is an S1 pattern where it has tested the consolidation high, and now we're forming a pattern that very much looks like an S2 pattern. Well, this has much more room to go. It is in compression mode, so we've got a pattern within a pattern, and this can develop even if gold, let's say, and silver are in a pullback mode. Copper could do really well over the next coming months. Now this is crude. That's a special case because we had this technical overreaction. This was as well during the pandemic crisis, when the future contract could not be delivered and price dropped. No, it could not start, and price dropped. They sold basically the barrel for nothing, for $7.40. There was a technical underreaction. We got a dead cat bounce into the moving averages and slightly beyond. Well, it actually bounced into the 200. We got a stop run move, a spike through the 200, and then it found resistance at the prior price action. Now after such a huge bounce, right, well, we get a bounce on the opposite direction. Well, where to? Well, into the 21 moving average, and now price is squeezed between the 200 and the 21 moving average. It just needs to come down, right, and refresh basically to digest this volatility. So this is a consolidation. We can see it's here, and we can actually see that this is an S2 pattern. Well, we don't have a trend in the high frame, but this is an S2 pattern. It's basically consolidating out. And once this is done, we can see how higher highs, lower highs, higher lows. Once this is done, well, it could create quite a move in both directions because we have stop run levels on both sides, or it's probably up because we're in a commodity super cycle. Let's have a look here at heating oil, the HO contract. Well, we didn't get this huge technical reaction to the downside, but we had the S1 pattern, and that created a stop run move, right? Broke the consolidation high after such a big move. Well, we're in consolidation mode. It's a refresher. So again, this one might take as well a bit more time, like looking at these higher time frames. Now let's have a look at natural gas, the NG contract. It is still in a downtrend, right? But I mean, we're approaching the zero level, right? We're at $4 now, 4.40, and at some point of time, this will turn around. Currently, we're in a counter trend rally, similar to what we saw here, or what we saw here, or what we saw before. Natural gas is famous for its counter trend rallies, like the strong. I mean, big green bars at a sudden and the big red bars at a sudden. So it's a really nice instrument to trade, except that the position size for natural gas is a bit high, right? So we've got a counter trend rally. Well, we have to see whether this is the all-time low or whether this is going to break lower. But a counter trend rally can be very strong, and you never know when it ends. Currently, well, I can just pull that over. Currently, we are sitting here on the weekly chart at the stop run level, so we could actually see how this moves higher for the rest of the month. Now let's have a look at the interest rate futures. Here, as an example, the ZF contract, the 5-year UST note. Well, this looks like it's going to fall, right? So the Ukraine crisis, the war of Ukraine, and that was February 2020, so that was up here. We were at historic low yields, and that's triggered an increase in yields. So now we are consolidating in a tight trading range on the weekly chart. So something is going to happen. I think we're going to see the 200. So some event is going to happen, similar to the start of the war, that leads to an increase in the yields. Well, it could be anything. It could be debt problems, it could be repayment problems, or whatever, or it could be a worsening of the war. So let's see. But a big move is in the cards. So that if it gets to the 200, we could see a spike through. And yields could really spike, and that would make the news, right, everywhere. Now this is the US dollar index, the DX future. So if price goes up, means that the US dollar strengthens. And what we see here is, well, this is an S1 pattern. It had triggered, it didn't work. There was a failure, right? Whenever a pattern fails, well, a failure to follow through is a counter trend, it's a counter signal, and basically the target becomes the start of the momentum move. So we could see how the dollar gets stronger and stronger and stronger up to this level. That would be like 20%, more than 20%, yeah, to 20%. It could gain in value, right? Well, let's see. It could as well turn around and re-break. And we see that the dollar should lose value. But I think we're going to see a spike to the upside. And well, the patterns are already aligning. That's a bullish pattern. And we just have to see. We just got a little bit of volatility with Trump coming into office and tariff talks. I mean, this recent spike here, this recent big red bars is from tariff talks. I think that was as well some tariff, or was it when the president was elected, beginning of October, right? That triggered this bullish run. Now we've got a bearish run. Well, that's the aftermath of the US elections, and well, markets will tell.